Okay, recording this video after close of trade Monday, 6th of January 2014. Hope you had a good day's trading today. Well, there we go. We're kind of back into it. New year. Kind of a decent day's trading, about 1.2 million contracts traded. We've still got this weather pattern moving through the northeast of the US, and that's affecting Chicago and New York. So not everybody's back at their desks, but at least it's kind of better than it has been over the last 2 or 3 weeks. So that's kind of good. It's not going to be to the end of the week that things kind of really get back to normal. I still think the weather's going to be impacting Tuesdays and Wednesdays trade. So there we go. Now, before going to the intraday charts, I just want to look at a couple of the daily charts, big picture charts. First of all, this is the Emini. So the at ES, continuous contract, day and night chart here. And you can see over the Christmas period, we put in a nice little pullback to end of trend sequence here, topping out at the 1840s, 1850s. Now, since that's been put in, we have some downside bias. So we've got resistance to support that we're making at the moment, and that's why we had a downside bias today. And I still think we've got a few days for this to kind of play out until that support level kind of goes in. And today, you know, we did kind of bounce off the high teens, but I don't think the bottom's in terms of that move down. I still think we've got some room to move on the downside. The other thing to note is these little Rambo patterns kind of moving into the new highs. So this is amateur up bars into new highs, and that's showing the amateurs kind of getting wrong-footed here. It shows a lack of demand. You know, you can see it previous periods where we kind of rolled over from Rambo patterns up here, leading into a little bit of weakness, another one here leading into some weakness and so on. Just shows lack of demand, and you know, it's unfortunate, but I think, you know, particularly around the Christmas period, the professionals are all away from their desks. The junior traders are in charge, kind of looking at things, and all this is little amateurs kind of, they probably have day jobs and don't get an opportunity to trade the futures. They kind of are on vacation. They think, well, you know, the market's open, might as well trade while I'm on vacation. And that's all that's happening over there. That's just amateurs kind of effectively playing with themselves during that Christmas period. So it's kind of sad to see, but it was leading to a lack of demand kind of into these highs, and that's why the market's kind of rolled over. So that's on the daily chart of the Emini. The other one I want to show you was Crude. And Crude here, so I took my loss at 98 on Crude, and we had this little bit of a move back up to $100. You can see it was a Rambo pattern leading into that kind of strength there. And I think what was going on was a lot of people's kind of moving averages started to roll over and reverse and go up, and so, you know, people were chasing this thing a little bit as it kind of went back up to 100. But I said in that video a few days ago that, you know, I was happy to take my loss at 98 because there was still some downside to be proved, because we've still got this cyclical energy that needs to work itself out of the market. So we've got this swing down from resistance to support. That cyclical energy has to play its way out, and that's exactly what's going on here. So it was a little overshoot of that pullback resistance level, but it's kind of come down really hard over the last 3 or 4 days from up at $100 down to 93. So that will be pulled back to dirty end of trend. You know, the kind of selling that we're going off either be another exhaustion pattern or a flush pattern kind of going off here. For me, that's kind of interesting because it's starting to set itself up. You know, we look at the commitment of traders numbers on Crude, and they're still very, very positive for a rally in Crude. So let's see if that starts to put in the activity that we need to bottom this thing and change this thing into an uptrend. But, you know, kind of wait and see. Got to take our time over these things. The other thing that people were talking about today was gold. So we had this supposedly flash crash in gold where, you know, the market kind of moved pretty heavily down at 1200 here. Doesn't look very extreme on the chart at the moment, but just I've been saying this for crude and gold and silver over the last several weeks. These things have to play themselves out. We're still below support here. We're looping around, coming back up to a cross on Better Sine Wave, which will be a pullback and a downtrend. That's got to play itself out, pullback to end of trend. And we've still got to see an exhaustion pattern on the left shoulder here on gold. So, you know, this thing is just taking its time. If it's going to start to rally during, you know, January, February, we need to see everything kind of come in place. So I'm waiting for that little bit of strength to kind of come in. Then we get that cyclical cross, and that'll be a resistance to support move kind of down, quite like the Crude move in terms of playing out that cyclical energy that kind of goes on. And you can also see that on silver. So silver, we're below support here, a little bit better in terms of putting in exhaustion patterns and bullish divergence and blue professional bars at left shoulder. So that's a little bit better in terms of that, but you can see we're coming back up to a cyclical resistance that'll print here. That'll be pulled back in a downtrend. So we might have a little bit of strength until that kind of comes in, but that still has to play its way out. So silver and gold and crude have all got to play themselves out in terms of those pullback to end of trend moves. All right, now let's talk intraday charts. 1500 tip bar chart of the Emini. And so my first trading day back into it for about 3 weeks, and so I'm always a little bit kind of nervous coming back into it. And I started off trading pretty badly. I was down 5 points after 2 trades, but pulled it back after my 3rd trade and put in a little 4th trade to end the day up too. So I wasn't too displeased with that. But you're always a little bit nervous because of a new data connection and kind of the way things are trading. So there wasn't a real decent setup for this short move, this kind of waterfall move at the beginning of the day. You can see all the blue professional bars coming at the open, and that was actually resistance on the 4500 tip bar chart here, and it was a pullback to end of trend on the 500 chart, but there wasn't enough in it in terms of signals with blue professional bars or testing back up into that high at 32 to really signal a change in trend there. So I just kind of watched this kind of develop as it went forward, and then when it kind of bottomed out a little bit and started to rally, I went long at 25.75, took a loss of 2 points. The ISM numbers kind of came in, and I knew they were due, but I wasn't looking at my watch, and so when that kind of came in, that kind of volatility activity, that was a little bit frightening for me, so I kind of got out with 2 points. Then tried to take a short trade after those blue professional bars kind of came in at the high there, and that went nowhere, so short at 24, took a loss of 3. So I'm hurting a little bit as we come back up into 28. Now, a couple of things I want to note on this chart. So although we kind of bottomed out with exhaustion patterns and bullish divergence kind of come in here, we had not topped out with an exhaustion pattern at the highs. So I'm always looking for that for a change in trend. So when this started to rally back up into 28s, there's the exhaustion pattern kind of come in. Even with all that amount of buying, you can see it didn't get very far. The blue professional bars start to come in particular this up blue professional bar gets cracked to the highs by a fraction, and then kind of heads down. As soon as it's moving through the lows of that sequence of blue professional bars, we know things are kind of heading down. And you could see it more clearly on the 4500 tip bar chart. So no blue professional bars overnight or during the day until there. So that on that retrace is when the professionals are saying time for me to get short. They were getting short at 26.27, and as soon as that cluster is broken to the downside, we know we're heading down. And so that exhaustion pattern is important because it's the first one we've seen in order to set this thing off into a downtrend. So that was my best trader of the day. That was short 25.75, and I took 6 points out on the way down here. So now, interestingly, on the downside, we have not seen exhaustion selling kind of going on. This short covering rally that we've got going on, we've got exhaustion patterns, flush patterns, and so on kind of going on here, but we've not seen anything on the downside. As soon as we break through support here, we're into another downtrend on the 1500 tip bar chart, kind of heading down. Whole bunch of blue professional bars at the end of the day. That's not unusual. They're closing out positions and so on. But I still think we've got to see exhaustion selling on the downside on the 1500 tip bar chart before this thing is over. So we're moving into a downtrend here. So I think we've got a bit of bias to the downside tomorrow as well. And similarly on the 4500 tip bar chart, we had one here on the previous day, but we've not seen one during Monday's trade. So I still think we've got downside bias kind of going on here. As soon as we test these lows, I think we're going to start to see that exhaustion selling kind of come in. So a little bit hairy the first day back trading for me. That's not unusual, but it's good to get your feet under the desk and see what's kind of going on. And I'm kind of pleased with myself that I kept trading through that rather than sitting on a loss and actually taking advantage of a good trade when it kind of sets up. That was the key. You need to see these exhaustion patterns to set, for me at least, to set the trend direction. And so because we've seen that on this rise up and on this one here, we've not seen it on the downside yet. We haven't had exhaustion selling on a downside. That to me suggests the down move is not over, so it's going to continue down overnight and into tomorrow, I would expect. Okay, so there we go. Hopefully I'll get this video out in time. You're probably going to get 2 in a row because I was late putting out yesterday's videos, but it just talks about the problems I've had getting a data connection in with TradeStation behind a firewall. So that seems to be fixed today. If you see any differences in the data on my chart, I'm going to be refreshing all my data caches and deleting those and refreshing those kind of overnight. I think that's always a good thing to do. So start off kind of fresh with a new data connection, make sure everything's kind of as picture perfect as I can get it kind of going forward. Anyway, hope you traded well today. Looking forward to the next couple of days.